Good afternoon, everyone. This is Henry with Simpler Trading, and in tonight's free video, I wanted to bring you some analysis on the spiders, also a few thoughts on some sentiment readings that we've been seeing. So we'll start off here with the SPY, where it's worth noting, or at least interesting to study, that the major correction that preceded us, right, measuring this swing high to swing low, has some resemblance to the correction that we've gone through here. Right? This print just barely eclipsed those previous kind of double top area. So it does make a relative new high and then flushes down into a measured move of this decline. So when you go into something like the employment data that is due out tomorrow, Friday morning, this could provide a little bit of a bounce. Right? Just saying that area has been reflective in the past. It's similar to the correction that we've gone through before. We could bounce back a good deal. But the study of the 21 EMA is very helpful in trend-based analysis, and that would tell us that after the Fed-based move, you came right into that moving average and then failed. Everything back up into that is a shorting opportunity. So I will be looking for moves up into this for the opportunity to either sell call credit spreads or even establish bearish butterflies. And as much as I like to give you these bearish extensions, 396 I believe would be the first target, there will be more below it. So what you really need to see to figure out which of these levels is going to hold in the S&P is when sentiment becomes exaggerated. Flipping over here to the put-call ratio, notice how the panic that we saw back here when the invasion of Ukraine was a fresh topic, that drove the market to fresh lows there on the February 24th move. On that flush lower in equities, you saw this spike higher in the put call. Also remember that that was the day that marked a significant low for the SPY. So essentially, from that move, we have not seen a more panicked situation. You've seen a little bit of panic, but it's all been generally complacent. So if equities are going to make a more meaningful, and this is kind of big picture and we'll see how it plays out. But what I'm thinking into the summer months, and if it happens quicker, I will update it here, but is the idea that you need to make a push above this previous high in the put call. Again, levels in the index itself can be helpful to think of as to say, where might I get a chance to finally buy this? But in markets where you're waiting for a capitulation, for almost like a black swan type event, sentiment is more helpful to gauge that. So think about all the selling we've seen, and it's not driven the put call anywhere near to those previous levels. So in summary, what we need to see is another leg lower for stock indexes, another fresh high in the put call, anywhere up into this area, and then we'll be able to take more of a formidable stance on the idea that equities may have a low in place. But until then, I think you approach every day with a special degree of caution, if not outright bearish, and we'll see how long it takes to play out. So y'all have a great rest of your evening, and I will see you at the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.